This is the real reason why you're unprofitable and you're not making money. It's very simple. This is exactly how I trade every single day. I don't do anything different. I literally look for the same thing in the market every single day without fail, rinse and repeat. And it's the consistency in my approach that allows me to have consistency in my results and be profitable, make money over the long term. So I'm going to show you guys exactly how I trade. Everything is about to be shown in this video. No sauce is going to be hidden. You're going to get every single bit that is needed in order to be consistent and trade the way I trade. Now, before we start today's video, I want to remind you that I have a free Discord community full of killers, full of winners, people who are making money, passing these challenges, getting funded, and going about trading the right way. So if you want to be part of an amazing community, a vibrant community where we're posting our wins, we're posting when we get funded, all the receipts are in the chat. You're seeing daily breakdowns from myself every single morning, breaking down the markets and what I'm looking for on that specific day before I even take the trade. Hop in the free Discord, click that link in the description below. Again, it's free. Can't wait to see you inside. So I'm going to give you guys a downtrend example and I'm going to give you guys an uptrend example. So first things first, okay, we have my moving averages, we have the VWAP, okay? My moving averages, I have the 8, the 50, and the 200, and then I just have the normal VWAP on here, okay? Nothing special. Now let's go back, let's bar replay, and let's go to the beginning of the month. Okay, I like to trade at 8 a.m. and this is how you should be back testing as well too. I come to the market every single day at 8 a.m. So when I'm back testing, when I am looking for new opportunities to study my strategy, to review trades I've taken in the past, you got a bar replay. You have to replicate it as if you're taking an actual trade. Okay, so I come to the market this day and you can see that we're clearly in a downtrend. What helps me determine if we're in a downtrend, besides looking at structure, is when price is below all my moving averages. I only look for sells when price is below my moving averages, and I only look for buys when price is above all my moving averages. Okay, very simple. So here you can see we're closer to being below all my moving averages versus being above all my moving averages, right? So right now my bias is sell. This is based off the higher time frame, okay? Higher time frame, I'm looking for sells. I'm only thinking sells, nothing else. No buys, no nothing. Only sells. Okay, that's all I'm thinking about. We could draw some areas of support as well too. Area of support, right here as well. And again, I'm only looking for sells. So going to the smaller time frame to execute, what am I going to look for? I'm just going to look for structure, for bear structure going in the direction of my higher time frame buys. Okay, so if I know on the higher time frame I'm looking for sells and nothing else because we're below all my moving averages, because structure is bearish, perfect. I'm just looking for a sell opportunity on the 5-minute chart. So let's play candlestick by candlestick. Okay, so we get a fat bearish candlestick, bearish engulfing, however we want to look at it. We break and close below all of these areas of M5 support. Perfect. Okay, that's what I want to see, because we were in an uptrend on the lower time frame and now we have broken structure and price is starting to make its way down. So where am I looking to enter? We're being patient here. We're being patient. Price is still pushing down. Okay, so as soon as we start to get that pullback, one of the ways I like to enter is pulling out my Fibonacci. Okay, pull out my Fibonacci. I measure out the move, and preferably I'd like to get in the golden zone, the 50% or 61.8. Now, if it lines up with a fair value gap, even better. I'll put my entry at the 50% because it's right below that fair value gap, retesting my 8 moving average as well. So I like the way that looks. Okay, go ahead and place my stop loss. Put it right here. Okay, let's say I want to hold here to negative 27 based off the 5-minute fib. Okay, so right now I'm just waiting for price to tap me in. Go candlestick by candlestick. Price is pushing up. Okay, we tapped into our golden zone. We're officially in the trade. Go candlestick by candlestick here. Okay. Slowly making our way down. And then boom. Hit TP. Simple, right? I went to the H1. I determined my bias. And are we in an uptrend? Are we in a downtrend? Is price consolidating? Okay, cool. We're in a downtrend. Then I just go to the 5-minute and I'm just looking for downtrending structure to get in for a trade. Very simple. Let's do another example. Okay, so that's a downtrend example. Let's see if you can find one more downtrend example. Delete this. All right, so let's go ahead and shoot a little bit forward. Things going super slow. All right, did I go too forward? All right, so it's 1 o'clock. 2, 3, 4, 5, 6, 7. All right, so we're right at 8 o'clock. Okay, this is 7. Okay, right at 8 o'clock, right when I'm looking to come to the market. It's very important when you're back testing at the time you actually want to take a trade in the market. Okay, everything stays the same. So looking at price, again, I can tell by looking at price that the current structure, we are in a downtrend. Okay, we have a little bit of spike and consolidation right here, but if we look here, price pushed up, create a high, higher low, higher high, price pushed down, broke structure, and now we kind of have a lower high / consolidation as price is trying to decide if it wants to push up into an uptrend and break above all our moving averages, or push into a downtrend and start breaking below our moving averages. But based off what I'm seeing right now, price is closer to being below all my moving averages, being below my VWAP as well too. So I'm gonna look for sells. Okay, that is my higher time frame bias. Now, when I'll stop looking for sells, if price decides to hold this area and starts to push up and what? Break above my moving averages. I want to see that on the H1, okay? Then at that point, my bias switches and then I go to the lower time frame and look for what? You guessed it. Uptrend structure on the lower time frame to get in for a buy. But right now, I'm thinking sells. Okay, so let's go to the 5-minute and let's look for some bearish price action. Okay, so 7:55, 8 o'clock. Okay, price pushes down. We're breaking below areas of M5 support. Okay, we're still pushing down. All right, we're starting to get a pullback here. Let's pull out the fib. Boom. Okay, now it's tapping into that 50%. We got 61.8. Okay, where would we like to get in? We got a fair value gap all the way up here as well. If I want to be greedy, okay, I'm taking that fair value gap, or I'm taking the 61.8, okay, as a retest our moving average right there. Now, if I want 100 tick stop loss up here, either one's fine. Let's take that 61.8. Why not? And same thing, we're going to aim for this negative 27. Okay, negative 27 extension here. All right, waiting. And look at that. Okay, price taps us in, pushes down, and one candlestick, boom, hits TP. I determined my bias on the higher time frame on the 1 hour, which was a downtrend. Once I've established that, no moment sooner, you have to decide, are you in an uptrend, downtrend, or consolidation on the higher time frame first before you start going to the 5-minute and clicking buttons and trying to scalp for whatever stupid reason. Okay, have a higher time frame bias. Go to the 5-minute, and now I'm just looking for downtrending structure and looking for an entry. Okay, I like to use Fibonacci's, the golden zone. I like to use M5 area of resistance or support as potential entries as well too. I like getting in off of fair value gaps, retesting moving averages, all that fun stuff. Okay, so these are 2 downtrend examples. Now let me see if I can find an uptrend example for you. Here we have a potential uptrend example. Okay, we can see that price create higher high, higher low, higher high, higher low, higher high, higher low, equal high, broke structure, but just pulled back to match this previous higher low, pushed up, created a higher low, and now we're starting to go bullish. Now notice how we are closer to being above all my moving averages, closer to being above my VWAP versus being below. So right now, I'm thinking buys, okay? We have an area of H1 resistance right there. We have a previous area of H1 resistance that just got broke by this nice bullish engulfing. Now let's go to the 5-minute and let's look for bullish price action going in the same direction. So you can see that price is already in an uptrend here. All right, let's play. Okay, so we're pushing up. Pulling back. We're waiting. So pullback broke all these minor area of 8M5 support. We're below the VWAPs. We're going to wait till we get some good price action above it. Okay, so we're starting to push above it right now. We got this fair value gap that just got placed. So if price wants to pull back into this one, we can look at that as a potential entry. Match this high if it wants to pull back. Okay, so now we're officially in the trade. And you can see here, we won the trade. Boom. Just like that. Just matching that previous New York session high that got printed. So, very, very simple, guys. Very, very simple. I would honestly say the hardest part is just determining exactly where you want to enter on the lower time frame. But the best thing you can do is just look for an entry in the same direction of the bias you have based off the higher time frame. So if you're bullish on the higher time frame, go to the 5-minute, look for bullish market structure, use Fibonacci, you can use fair value gaps, you can use M5 area of resistance / supports, depending what trend you're currently trying to trade, whether it's an uptrend or a downtrend. And then you could get in based off of that. It's very, very simple, but the main thing you need to understand is that higher time frame bias, lower time frame entry. Higher time frame bias, lower time frame entry. And that's it. My entry here was just simply based off the fact that price was bullish, pulled back, broke all these minor areas of M5 support, held this previous higher low here, gave us a nice double bottom, broke the neckline, gave us a nice fair value gap as well too. Price pulled back into that fair value gap, got in, price closed above the VWAP, not once, but 2-3 times prior to that. So I felt pretty confident that price pulls back into this fair value gap. At the very least, price can pull up and match this previous high. Gave me a nice 1-to-1, easy in and out, done for the day. Simple. Simple. Okay. But hopefully this video was super helpful. I plan on doing more in-depth analysis on specific lower time frame entries that I like to take, but this is exactly how I trade every single day. This is exactly how everyone that I trade with in the war room every single morning trades every day. It's just rinse and repeat. Very, very simple. Trading with the trend. If you trade with the trend, because the trend is your friend, that is how you remain consistent. That is how you get profitable.